SaaS Backwards is sponsored by Austin Lawrence Group, specializing in demand gen for SaaS. It sure is noisy. I deleted 100 emails from vendors just this morning. Your buyer has gotten better at ignoring you, and you're gonna need a big idea if you want to cut through all that clutter. Austin Lawrence is just the right agency to help you find it. So if your campaigns are falling on deaf eyeballs, let's talk. Visit austinlawrence.com today and let's build something bigger.
Welcome to the SaaS Backwards podcast, where we reverse engineer the success of fast-growing SaaS firms and explore strategies CMOs and CEOs are using to drive their businesses forward.
Welcome to SaaS Backwards, a podcast that helps SaaS CMOs and CEOs to accelerate growth and enhance profitability. Our guest today is Jason Doshi, CEO and co-founder of Payments.io, a SaaS digital platform that allows title companies and real estate brokerages to send and receive digital money transfers, saving everyone money and time while reducing the risk of fraud. Hey, Jason, welcome to the podcast.
Thank you, Ken. Glad to be on.
Yeah, I think we're going to have a great episode. Before we do dig in, could you tell us, Jason, a little bit more about yourself and your company?
Yeah, for sure. Happy to. So my professional background is in mortgages, spent about a decade growing a retail mortgage origination business. And about a few years ago, I really started to think about all the pain points that were involved in a real estate transaction, beyond just the origination of a mortgage. The origination of a mortgage is central to a real estate transaction, but there's a lot of pain points that are involved in the transaction. And it's a very fragmented experience for the buyers. It's a very fragmented experience for the industry participants, and really started to think about what we could do to help solve the fragmentation and help solve the communication issues that are involved within a real estate transaction, and decided to focus on the movement of funds.
That's great. And I think you started to answer the question, why a startup in payments for real estate? This is a pretty big market, right? So, and it's been able to do its transactions before you started. So why is moving money, an opportunity for you? And why was this an area ripe for innovation? It seems like there was a lot of technology already applied.
Yeah, so the innovation and the technology that we've seen over the past decade in the real estate space, specifically as it relates to mortgage and title, has been around data collection, documentation storage, and that's where a lot of the transaction went online. So when you think about someone looking for a home, contacting a mortgage lender, closing on their home, sending all that data and documentation, within the title company, real estate agent, mortgage company, appraiser, a lot of innovators, tech companies were out there solving those problems, and they've done a great job doing that. But what largely remained offline is the movement of funds. And when I talk about offline, I mean, having to go to the bank to get a certified check, having to pick up the phone or go to the bank and send a wire by exposing your account numbers and routing numbers. So although we saw a lot of digitization of the real estate transaction, the part that was very painful and time consuming and inefficient was the movement of funds, and it touched every part of the transaction. It touched the origination side, it touched signing a contract, it touched dispersing on a transaction by the title agency. So Ken, like you mentioned, real estate is a huge market. There's a lot of industry participants. There's a lot of people involved in the transaction. And some of the tech companies have done a good job of tying a lot of pieces together, but the movement of funds still largely remained offline.
I think anybody who's done a refi or bought a property recently has experienced just that, right? You do everything in this portalized environment, and then when the day comes, you're either running around with a check or trying to get a wire sent. So it's still very much a separate action.
Exactly. And what's interesting is that when you look at other part of a buyer's life, everything when you move money around is digitized, right? Like very few people, especially the younger generation, millennials, Gen Z, have checkbooks. When you think about someone, transferring money amongst friends. There's Venmo, there's Zelle. When you think about paying rent, they're using all these digital tools that exist. But when it comes to a real estate transaction, they've been very slow to adopt to digital payments. The real estate industry was slow to adopt to DocuSign, for example. They were slow to adopt to remote online notarization. RON legislation just got passed through Congress to make RON more accessible for the real estate transaction. So that's a huge win to digitize the real estate process, and payments is adjacent to that. So, we're excited for where we are as an organization. We're excited for the value that we're bringing to the industry and, hopefully making some positive changes.
And I think you touched on something, you sort of glanced at it in a way that a lot of, especially younger participants in the market, are used to electronic transfer of funds. And it could be a point of differentiation for your customers to serve them in a way they're used to paying for their rent, or they're splitting bills with their friends in a restaurant. So if you look like the way they're used to handling money, that might be a good differentiator for your clients as well.
Mm-hmm. Yeah, that's exactly how we see it. We see our service to title agencies, real estate brokerages as an unfair advantage, as a competitive advantage. When a buyer is out there looking at properties and they've DocuSigned or used some e-sign platform to send in their offer, if you're able to send in that earnest money deposit digitally within a matter of seconds, that might give them that edge over another buyer, right? So when you think about how the tools we're offering to our clients helps them win more business, generate more revenue, differentiate themselves amongst their peers and their competitors, we feel like we definitely add value there. So it's really an interesting time to be in this space, because what we're seeing is that a lot of technologies out there need to be verticalized in some sense, right? We need to bring a solution to a title agency or a real estate company that is tailored to fit their needs. There are other payment platforms out there like Venmo, like Zelle, but they're not built for the real estate industry. So what we've done is customize the solution, tailored it, using our operating experience over the past decade of what works, what doesn't work, how title agencies transact, how real estate companies transact, and exactly what tools they need in order to succeed and gain clients and win business.
Let's talk a little bit about your go-to-market strategy, because I think it's kind of different than, I was just speaking with a CEO of a sales territory management software. That's a very broad marketplace. He has thousands, if not tens of thousands of potential lucrative prospects to pursue. This is a pretty different kind of market, isn't it?
Yeah, so our client, and when you look at the broader real estate pool, is every single title agency out there. But that would be a little naive to think. So what we've done is, we've looked at who our ideal client is based on the number of transactions they do and what software they're using to transact on a daily basis, right? So title companies, for example, use title production software. There's a handful of them out there. Some are dated and some are at the cutting edge of technology. So our ideal client is someone who's using the latest and greatest technology for their TPS or title production software, because they've invested the time, they've invested the money to become a tech-forward, tech-enabled title company that allows them to transact seamlessly. And our product, fits right in there, because if they're using a cutting-edge TPS, then our solution, payments.io, makes sense for them because that's where they want to be. They don't want to be stuck in the early 2000s or 90s and say, we're okay using paper for everything, because that's not where the market's headed, right? When you want to be innovative and you want to make a difference in an industry, you need to go where the industry's headed. And that's always been our philosophy, is what does this industry look like 2 years from now, 5 years from now, 10 years from now? And that really plays into our sales and marketing strategy. So identifying an ideal client that uses the cutting edge, latest technology for their TPS is a great fit for us. Someone that's maybe doing 500 to 2,000 real estate transactions, right? Because they can move a little bit quicker. They're not a huge organization that's going to take 6 months to a year to decide on what software they're using. So when we always look at the total unit count of how many transactions our prospect is conducting. So that's another metric that we use.
I think that's really interesting. And I love the way you frame this. The naive view of your total addressable market, your ideal customer profile, would be a much bigger pie to try and go after.
Right.
But
Right.
just two cuts of like a firmographic, their posture towards technology and the relative size, sort of the Goldilocks size, right? Not too
Right.
small and not
Right.
too large. All of a sudden, you have a much easier to sell prospect. It's going to kind of be spiritually aligned and is going to have the right volume of work to be a good prospect and client for you.
Right, exactly. Because there's over 15,000 title agencies, right? So when we look at that number, it's great and exciting, but how many of those 15,000 are doing 5 transactions a month? They're waiting for the mail to arrive. They're writing paper checks. They're mailing them out. That's just not who we target. And unfortunately, we don't think they're going to be around for much longer. So we're looking at title agencies that we see have a long-term future.
Well, Jason, you just threw the gauntlet down there, right? If you want to survive, you got to get on the technology train.
Yep, 100%.
That's a pretty good message. Talk about compelling prospects to consider a solution, the survival imperative. But there's also something about the way these folks sort of roll up in a market, right? There's a dynamic in this market that you also take advantage of. Is that right?
Yeah. So what's interesting is, we sell into title agencies because they're the ones that sit at the core of the transaction in many respects. But, what's relevant to us is they're collecting the funds from the buyer. They're collecting the funds from the lender if there's a mortgage involved, which there usually is. And then they're dispersing out to all the relevant parties in the transaction that are due funds. So they're dispersing out using checks, wires, and our platform to sellers, real estate brokers, real estate attorneys, mortgage brokers, municipalities, homeowners insurance carriers. So they're really core to the transaction when it comes to the movement of funds. And what we found, what's unique about title agencies and this industry in particular, is that although they're independent agents, they really do look to the national underwriters. So there's about, a dozen or so national underwriters, with the top 5 probably having 80% market share, that really provide support and guidance to these title agencies. The title agencies look to these underwriters for best practices in terms of policies and procedures. They look to them for technology solutions, for what software to implement. They may even look to them to find new hires, right? So they really lean on these underwriters. And what we've been able to do very successfully is forge strong relationships and partnerships with these national underwriters. Because the way the underwriters look at our business and our organization is that we're helping the title agents. We're helping their client. And the way we're helping their client is by helping them reduce wire flow, helping them become more efficient, helping them do more with less. And the more a title agency does, the more business they can generate for the underwriter, the more clean business they can generate for the underwriter, the more efficient they can be. And that helps the underwriter, obviously, generate more profit. So what we've been able to do is have these strong relationships with these underwriters. They help promote what we're doing, and having that validity, that credibility from a national underwriter has been really powerful for our brand.
So I want to point out, encourage people at this moment in the podcast. So what we have in payments.io is a couple of subject matter experts who decided to go into a technology business, right? And you just demonstrated some pretty nuanced understanding of your business, which makes sense. You would have that. But I think a lot of potential entrepreneurs kind of a little afraid to make the leap when they see a problem to build the solution. So I just want to sort of wave the flag that this kind of expertise built up over more than a decade is a great way to found a business. But you yourself are not a technologist, right?
Correct, I'm not.
So how did you build a technology product when you're not the technologist?
Yeah, I mean, most companies are founded in 2 ways, right? Like you mentioned, Ken, you have subject matter experts that see a need or are deeply intertwined with the business, see a need and don't know what to do about it. They're just frustrated with it, but don't have the technical expertise to do something. And that's us. And then you have someone who experienced a problem while conducting a transaction on their own, right? Someone who's like, I was a home buyer and I was so frustrated, and I have an engineering background and a software background, and I can do this. And there have been successful companies built in that manner. but it's a long and dangerous road because conducting a transaction as a consumer once, twice, even maybe a handful of times is not necessarily enough to really build a solution that is going to be welcomed by the market. And we felt comfortable diving in, although not having a technical background, we felt comfortable diving into building a solution because the only gap technically for us was finding a really strong CTO, which we were fortunately able to do. So a lot of the learnings that would happen as we're building the product, we've learned, right? We've learned that over the past decade. So we kind of know where the mines are, what to avoid, where to speed, where to slow down. And, having a strong CTO that's built solutions, banking solutions outside of the real estate industry, because, moving money from point A to point B in some respects is similar regardless of the industry. What's different is a little bit how you do it and what metadata is attached to it. But having a strong CTO is extremely important because moving money around, it's not an easy thing, right? When you add all the layers of a real estate transaction on top of the fact that you're moving money, it's time sensitive. It's a lot of money that's being moved around. It's people's life savings. It's very emotional. When you stack all these things on top of each other, we play in a very crucial role and we take that responsibility very seriously. So, we've built our solution to be compliant, to be secure. And luckily, we're able to find a very strong CTO who's able to lead those efforts for us.
That's great. So it's not a barrier to success if you're not a technologist, right? You have to find someone you can bring in to lead your technology development. And are you doing all the software building in-house, or is your CTO running an outsourced firm for you?
Yeah, it's all in-house. It's all US based. Again, very cautious of how we're building our solution because, we're moving a lot of money. And there are offshore solutions that are available, but, unfortunately, given the space that we're in, it would be a significant cost savings for us. Early on, we did some UI, UX work, offshore, but they weren't really touching any of the code. So I think, for those founders that are looking to offshore resources, it's a viable, very cost-effective solution. You just need to be careful what level of permissioning they have and what exactly they're working on.
I think it's a really great little vignette. Maybe you use them as you're building your prototype and MVP, but when you're actually building product, especially where money is concerned, it's a nice thing to be able to say in a sales situation, oh yeah, everybody's here on the East Coast or wherever your folks are. It's they're US citizens coding locally, right?
Right, exactly. Like we have non-disclosure agreements and things like that, and they're all US based. So, they would uphold, when you look at offshore, you're getting into global and cross-border law, which, I'm not an expert in.
You and me both. Hey, let's go back to sort of part of the go-to-market here. You have a really interesting go-to-market. You promised that you're going to white label this solution. And why is that attractive to your prospects, and how does that work out for you guys?
Yeah, that was something that was very important to us from day one. And a lot of that came from our experience as being operators in the space. Again, when you look at the number of title agencies, there's over 15,000 title agencies, number of mortgage companies, there's over 10,000 mortgage companies, there's over 1 million real estate agents. The real estate space is commoditized. No matter which way you slice it, it's a commoditized business. And how do you win in a commoditized industry? It's two things. It's service and brand, right? Mortgage companies, title agencies, real estate agencies, they all promise the best service, which is great. And I hope they deliver on that. But when you talk about your technology and how you can differentiate yourself, we felt that it was very important to allow our clients, our title agencies, which are our clients, to showcase their brand, to showcase the fact that they are investing in technology and they are a differentiator. So what we do with the white labeling, it's a very deep white labeling. It's not just throwing up their logo. It's a custom URL that the title agency gets. We do have their logo on it. We have their colors. So it really ties seamlessly with their brand. And the other thing that was important for us is that we wanted the consumer to at least feel comfortable knowing that they're using a solution that was at least owned or leased by the title agency instead of going to a complete third-party site. Because, when you're asking a buyer to send $10,000, $20,000, and you, hey, go to this random website and enter your banking credentials to transfer this money, there's undoubtedly going to be some pause. And we didn't start out with a solution that wasn't white labeled and realized that, oh, white labeling would help. White labeling was imperative to our success. And we realized that from day one because of our experience in the industry. And our clients love it. Our clients love it because it gives them that sense of comfort that they're staying within the title agency's ecosystem.
I can imagine a real estate broker, a realtor, responding very positively to the fact that the title company's system is in play here, right?
Yep, exactly. They're comfortable working with that title agency. They see a solution that has their branding on it, their look and feel, which is extremely important. And what's really cool, we just launched this actually. We've taken it one step further to allow the real estate agent to co-brand with their title agency. So we were allowing the real estate agency to showcase their look and image because real estate agents, again, being in a commoditized business, have to promote their brand. And the way they can promote their brand is by telling their buyers, hey, I have a slick, cool, innovative payment platform. My picture is on it, my branding is on it, and it's co-branded with the title agency that's our client. So these types of things constantly evolving to see how we can help our clients generate, more business and add credibility to their clients.
That's awesome. I just think that it's so infrequent to see white labeling as a strategic initiative. So maybe that's that one pearl of wisdom that I told you we go for in each episode, the possibilities of growing your business without having a giant brand necessarily, right?
Yeah. I think it's important to really understand the psyche of your client. You have to be able to understand what matters to them without them blatantly telling you. There's some reading between the lines there. There's some understanding of how they operate, what matters, because oftentimes clients don't really know. They have a tough time articulating their problem because they're in the day-to-day, right? They're like, I have a problem here, I have a problem here, I have a problem here. How do you take that holistically and give them a solution that they really love and for our benefit becomes mission critical? That's really what I think any organization strives for, is become a mission critical solution or product to their client. If we did not exist, would our client be able to wake up and conduct the business at the level that they're conducting business? And for a lot of our clients, all of them for the most part, is no. They would lose efficiency if we did not exist.
I want to turn to a part of the SaaS business that there's a lot of research on and a lot of work being done, and that's pricing. And I think it was a great segue because you said you want to be mission critical to them, but the pricing needs to encourage people to start and continue and grow with you. Can you talk a little bit about your pricing strategy and how you arrived at it and how it's working for you in the field with your clients?
Yeah, so again, using our experience and being very, purposeful, we decided to engage with a hybrid model, right? Can you see ones that are SaaS and unlimited usage for $100 a month, and then you see purely consumption-based or transaction-based, and then you see some of these freemium models, which are then upsell. You get a very basic version, and then you have to pay thousands of dollars to implement a better version of that or upgrade to a high monthly cost. We've pretty much stuck to the same plan since day one, which I don't know if that's good or bad, but it's been working for us and we're always iterating on our product.
Well, if it's working, it's good, right?
Right. Yeah, exactly. We're always thinking about, new and innovative ways, obviously, around product and even pricing, but it has been working for us, again, because of our client, right? You have to understand who your client is, how they transact. And the biggest thing with our clients and the real estate industry, which we saw over the past, 2 years at this point, is the volatility. Title agencies are very into sign up with long-term contracts that will kind of tie them into something, especially if it's an innovative product. The main software that they use, they are in contracts there because they need that to conduct business. And being an innovative solution and being new, it's hard for us to benchmark. So we decided to get a little bit creative, give them a hybrid model, which is a low monthly subscription cost that gives them access to the platform, access to our integrations, and then have a consumption-based or transfer-based model. And what this does is, having that monthly fee, they do pay attention to that invoice, right? It's like, okay, I'm paying $50 a month. what is this? I should start using it if I'm not already using it, or wow, $50 is pretty cheap. I hope they don't charge me more, right? So consumption part of it is nice because it ebbs and flows with their business. If they're having a great month and they're using our solution a lot, that's fine because the volume is correlated to their, closing volume. And the other nice part is that we offer our clients the ability to charge their clients. So it's not set in stone that they have to pay us the transfer fee or they have to charge their client the transfer fee. We customize the fee so they can charge their client or they can eat that cost. And again, have it as another competitive advantage that they're able to offer a free solution to their clients as opposed to, some others that may be.
But you're paying for a teller's check or a wire transfer, right?
Exactly. When you look at our pricing, it's very transparent. It's on our website at payments.io, and we charge $9 for an incoming transfer. When you look at the hard cost of a wire, you're $20 and above, sometimes $30, $40. When you look at, Ken, like you mentioned, a teller check, certified check, you're at least $10. And that's not even factoring in the time and energy to go to the bank. And what we found really interesting about that is throughout the pandemic, there were a lot of real estate transactions being conducted, but banks were closed. So how do you go to the bank to get a teller check or a certified check when the banks are closed? And a lot of people moved, right? That was the biggest thing, the great migration. Everyone's moving out of the cities into the suburbs. People don't really think of changing their bank. If you're banking with a regional bank and you move out of that region, you're in the Northeast where there's, a lot of PNC banks, and then you move to the Southwest where PNC doesn't have a presence. How are you going to go to that bank? So we pretty much offer our title agencies and we offer their clients the ability to transact wherever they are at a very affordable cost, 24/7 for the moment.
I really appreciate that conversation about pricing because I think there's a lot of opportunity, especially when you talk about like bundling in with their services so that it looks like cost savings to the customer or being able to recoup the cost. You're really allowing your customer to decide what their business model is going to be. I think that's just another way your knowledge of the business is helping you be successful. Hey, so I want to talk a little bit about the funding for your business. Now, you self-funded quite a bit before you went out and got investor money. Can we talk about the decision to self-fund and then ultimately when and why you went for outside funding?
Yeah, that's a very interesting time for our business. We closed on our first round of external capital in November of 2022, which anyone who's following the fundraising timeline over the past few years, it was definitely an interesting time to do that. But, we initially decided to self-fund the business because we were fortunate enough to do that from previous businesses that we were successful in those businesses and had the cash to pretty much just self-fund it, right? We didn't need to go out on day one and raise seed funding to dilute ourselves. We were fortunate enough to do that, but it's a different mindset, right? When you do something like that, it's not a grow as fast as you can. And it's challenging when competitors are raising, VC money and their goal is to grow as fast as they can. And, we're in a little bit of a different race. And what's nice about being in the real estate market is that it is cyclical. It's a huge market. So we're able to take a longer time horizon. We obviously want to be quick and fast and learn and grow revenue. But, being self-funded, you're just forced to have a little bit more discipline, which is nice, especially when we saw the euphoria of 2021 and, early 2022. It was interesting to be in the same group within a same category, but kind of playing a little bit of a different tune. And I think that was, having that discipline was very important for us because it forced us to make decisions. And one of the things that, I've learned over the many years as a founder of different businesses is that it's important to say yes, but it's also important to say no. And that's kind of what you learn when you're self-funded. And we decided to raise money in 2022 for a few reasons. One, we felt that we reached a good product market fit, right? The market started accepting us for what we were building. It was important to them. We started to hit our growth numbers in stride, which is always amazing to see. And the second is we found a really good strategic investor that saw our vision and again, taking a longer term perspective on the investment because we had a lot of conversations last year where it was like, well, interest rates are going to rise. what are you going to do over the next year or two? It's like, we're not building a business for the next year or two. We're building a business for decades to come. And we want to add shareholder value. We want to add value to the industry. And whether rates are 4%, 7%, or 8%, fortunate for us, we've been able to grow even while the overall real estate market has lost 30, 40, 50% in volume. We've been able to grow month over month. And that's why last year, when it wasn't the best time to raise outside capital, we made that decision to do so because we found a really good strategic investor that was going to help grow our business.
And isn't that a great story to tell your investors? Hey, the market's decelerating, but we are not.
Yeah.
That seems exactly. Like you're almost raising from a position of strength, right?
Yeah, that was the thing, is we didn't want to go in at the idea phase and raise money. We didn't want to go in at the time where think this is going to work. We wanted to be very mindful of who we raise money from, when we raise it, and why we raise it. And, our previous businesses were self-funded. And I think having that discipline is extremely important as a founder, especially in this environment.
So my last question is my favorite question lately, which is, what would you do differently looking back so far, and why?
Yeah. So, I just talked about having that discipline, not getting caught up in raising money and growing at the cost of everything else. But there was a short period of time, early 2021, we were self-funded, started seeing a lot of VC interest, started seeing some of our competitors raise some money, and we made some decisions, built some products, went all in on certain features that maybe were a little bit too soon. So I think, customer feedback, listening to your client, understanding where the market is, saying no when you know you should say no. I think that's just really it. Having that discipline is important and not straying from it, because again, it is easy to get caught up in that mindset of grow, grow, grow. And then, sometimes you make decisions that you were a little too soon, right? Building too many features at once without really getting the right feedback is probably something that, we're definitely in that zone today, but probably would have wished we were completely in that zone about a year ago.
Hey, well, that's a great place to land the episode. Jason, thanks so much. I really appreciate it. If people want to learn more about your company or reach out to you, how can they do that?
Yeah. Our website, payments.io. It's payments with an I, PAYMINTS.io. And my email is the best, very accessible. It's Jason at payments.io. And happy to chat more. Love having these conversations. Being a founder, it's, wear a lot of different hats. And it's nice to really talk about the journey as well as the product. Thank you, everyone, for listening. And thank you, Ken, for having me. It's been great.
That's awesome. You're a great guest. I'm sure there's a lot of pearls for other listeners. If you haven't already subscribed to the podcast, please do so on your favorite directory and distribution point. And if you want to reach me, I'm on LinkedIn/in/Ken Lempit or KL@AustinLawrence.com. Hey, Jason, thanks again. It was a great episode.
Appreciate it. Thank you, Ken.
Thanks for listening to the SaaS Backwards podcast, brought to you by Austin Lawrence Group. We're a growth marketing agency that helps SaaS firms reduce churn, accelerate sales, and generate demand. Learn more about us at www.austinlawrence.com. You can email Ken Lempit at kl@austinlawrence.com about any SaaS marketing or customer retention subject. We hope you'll subscribe, and thanks again for listening.